What is going on, y'all? This is Pay Me in Dividends, and today is March 16th, 2025. Now, before we jump into the video, let's do a quick portfolio review. As you guys know, I did make some changes to my portfolio. I put those changes out in a previous video, and basically what I did is I sold a lot of my single stock ETFs, and I went ahead and put most of that money into QQQI. And so now I have QQQI, XDTE, and I still have Misty because Misty is still paying very, very good money, right? And it is back above that $20 share price. And if you guys remember, last week my portfolio was around $65,000, but the S&P did end green on Friday. And so now that the market is closed, I am back above $70,000, which is a good thing. And this is all equity. I'm no longer using margin. It's all equity. I'm just going to continue to reinvest my dividends and also, inject money into my brokerage account when I can as well, right? So this is where we're at. But today what I want to talk about is I want to talk about S&P 500 income ETFs. Now, not all of these are directly invested into the S&P, but all the companies that are encompassed in these ETFs are in the S&P, right? So I just have a list here. And you'll also notice that this is the average annual return since inception for all of these ETFs, right? With the exception of a few of them because they're just so new. And so we don't really have much data on them yet. But I do think they're worth talking about just to see what they've been doing since they've been out. Now, this is total return without the dividends reinvested. And the reason I did that is because if you are expecting to eventually withdraw these dividends and possibly live off of these dividends, you want to look like you want to see what your returns look like without having to continue to reinvest these dividends. Of course, you would still want to reinvest a portion of those dividends in order to continue increasing your income and to keep that stability in your portfolio. But neither here or there, we're not going to get too deep into that subject. But this is total returns, which is capital appreciation along with the dividends accounted for the dividends, but not necessarily reinvested dividends. All right. So you'll notice the first one is XYLD. Now, this one does not get talked about much. And honestly, it is one of the OGs, right? This is one of the first kind of covered call ETFs. And this one has been out since 2013. This is by Global X. You guys are probably familiar with QYLD. They have QYLD, XYLD, and RYLD. But I just want you guys to look at this chart very quickly, right? Because you'll notice, right? So the price at inception was around $40 a share back in 2013. As of today, it's trading at around $39 or $40 a share. So basically, in 12 years of trading on the market, this ETF has remained very, very stable. And this is kind of what you want from income ETFs. You're not necessarily looking for capital appreciation. You definitely don't want your share price to go down over time, but you're kind of looking for it to trade sideways while also giving you that income, right? So I think XYLD have done a very, very good job at maintaining its share price over the years while consistently paying out that around 8 to 10% yield that is paid out on a monthly basis. So I wanted to start off with this one just to show you in real time what these funds can look like over the course of a decade or longer, because a lot of times we get caught up with these funds, right? And I am also a part of it, right? I own QQQI and XDTE, which are still relatively very new. And so it is good to kind of zoom out and look at a fund that has actually been out for quite some time, right? To see how it can actually withstand different markets over the years. So again, you'll notice the ebbs and flows here, but ultimately the share prices basically remain the same since inception. All right, so I'm not going to talk too much about XYLD. All right, it's not a very exciting income ETF, but it does pay a 8% dividend yield, and it is paid out on a monthly basis, right? So that's the first one. Again, this is just a list of ETFs that you can consider, again, just to get your wheels turning. You may or may not know about all of these, but it might give you an idea, right? So the next one we're going to look at is SPYI, which is actually one of my favorite. I'm invested into QQQI, which is the NASDAQ version, But SPYI is actually really good. They pay a 12% yield, and what I like about SPYI is they actually own the underlying, right? So if you look at their holdings, you can see their top 10 holdings are very big names, right? We all know Apple, Nvidia, Microsoft, Amazon, so on and so forth. So they have a pretty good dividend ETF here. It's about a 12% yield, and it is paid out on a monthly basis. And what I like about NEOS, right, with QQQI and SPYI, is their dividends don't fluctuate much, right? So if you notice here, the dividends do not fluctuate much. This is the reason why I went with QQQI, because it is a very predictable payout, which is really good if you're looking to actually, withdraw these dividends at some point. You kind of know exactly what your income is going to be on a monthly basis. So I really like SPYI. This is probably one of my favorite ones on the list. Now we're going to move on to the next one. We're going to look at two ETFs from Roundhill, right? The first one being XDTE. Now XDTE is a zero DTE covered call strategy ETF, and basically what that means is there are 0 days to expiration on these options. So they basically do daily options on this. It is all synthetic, meaning that they don't actually own the underlying position. But the cool thing about this one is the yield is pretty stable. I'd say it's anywhere from like 17 to 25% on average, and they pay out on a weekly basis. I mean, what more can you ask for than an ETF that is based off the S&P 500 and that pays out on a weekly basis, right? And so they've been out for about a year now, a little over a year now, since March 7th of 2024, and they've done pretty well, right? They pay out on a weekly basis. This is what you're looking for as an income investor, right? And overall, if you looked at their average annual, annualized return, it's about 10%, annualized, but it's paid out on a weekly basis. So I think this one is worth looking at, and it's, a big part of my portfolio. I have about 528 shares of it, so I think that is a pretty good option. The next one we're going to look at is XPAY. Now XPAY has not been out very long, so as you see, I do not have an average annual total return on this one, but it is one that I've seen a lot of people talking about recently. So basically what they do is they target about a 20% dividend yield, right? Now this one is paid out, let's look at the distributions, right? So if we look at the distributions, we can see that this one is paid out monthly, and they target a 20% yield, right? And so this one is kind of a direct competitor with SPYT from Defiance, where SPYT basically targets a 20% yield as well, and it is paid out on a monthly basis as well. Now I think where they differ at is their holdings, right? So SPYT holds IVV from iShares, and then they basically perform options on the index as well, whereas this one right here from Brownhill, XPAY, they just have a bunch of SPY options. It looks like, yeah, basically just a bunch of SPY options and SPLG. So that's where they differ right there on the holdings, but they're both targeting a 20% annualized dividend yield that is paid out on a monthly basis, right? So kind of looked at both of these at the same time, but they're kind of direct competitors, right? So I think that's good for the market, though, right? You kind of want to see what can which one is best bang for your buck. So we'll move on to TSPY from Tapp Alpha. Now this is one that I haven't done much research on, but just from a quick glimpse, it looks good, right? It's a 14% dividend yield. If you look at the chart is up, right? Up and to the right. And so there is some capital appreciation there as well. And let's take a look at the distributions. Now, this is another thing that I like about this one is they actually have a very consistent dividend payout, which is, again, what I like. If you're looking to actually live off of these or eventually withdraw some of this income, you want something that's dependable. You want something that's predictable, something that you can create a budget around, right? So I think funds like this are worth considering if you eventually plan on withdrawing some of these dividends. So I think TSPY can be a good option, right? Again, 14% annualized yield. It is paid out on a monthly basis, and you can see the holdings are very solid. You know, SPY ETF, and they're basically just doing options on SPY, which is the biggest, S&P 500 ETF on the market. So, I think this is another one that is worth looking at. Now, as far as average annual return, again, there's not enough data on this one. It is not even a year old yet, but since it's been out, it's been doing pretty good, paying pretty consistent. So it's probably one that I'll keep on my watch list, because eventually I want to add another one to my portfolio, another indexed ETF. And so this is kind of personal research for myself as well, right? So the next one we're going to look at is JEPI. Now, JEPI is from JP Morgan. JEPI has some history to it, right? So it pays about a 7% dividend yield, and it does have some history to it. It's been out since 2020. So we are going on about 5 years of history with JEPI. And I think the biggest thing I like about JEPI is the fact that it's from JP Morgan, which is one of the biggest, financial institutions in the world. And so you kind of have that trust that is backed behind it. There is a lot of money in this fund, assets under management. And so, I just think it's a really good fund. It's not super high yield. You're not going to get a 20% yield like, XPAY or SPYT, but you are going to get that consistent, 7 to 8% dividend. Now, one thing I'll say about JEPI is I guess the dividend doesn't fluctuate. There's not much of a variance there, but it does kind of fluctuate a little bit too much for my liking. But I guess it's not too bad. You guys let me know in the comments, what do you think? And this is what I really like about the NEOS funds, is it really does not fluctuate that much. You see the variance here is only 1 to 2 cents per share, right? Whereas JEPI, 32 cents, 40 cents, 33, 28. There's a bit of a variance there. That's the only thing I don't like about this fund. But besides that, I think it's a very solid fund. I don't see this going anywhere anytime soon. And I think JEPQ, which is based off the NASDAQ from JP Morgan, is probably a better move. It has better overall performance and a higher yield. But I think either one of them are worth considering. All right, so the next one we're going to look at is BALI, BALI, from iShares. Now, this is another one that I think is pretty good, right? So this one pays about, let's see how much this one pays. I believe it's about 8% yield, more or less. But either way, let's look at the dividend payouts, right? So we can see since November of 2023, they've been paying out. Now, again, this is one that fluctuates some on the dividend payouts, right? There's a variance there. It's not too consistent. I guess it's not too crazy, but a little too many fluctuations for my liking. But it does offer capital appreciation, right? So that's one thing I do like about it. It is based off of the S&P 500, right? That is the benchmark. It has 243 million in assets under management, and it is paid out on a monthly basis. And we can see here that it's about an 8% dividend yield. So again, you're going to get these top 10 companies. These are all companies that we know, and you're going to get about the same results as a JEPI, more or less. All right, so there's BALI, a bit more conservative for high yield investors, but still probably a good long-term investment. And we'll move on to YieldMax, right? So YieldMax, of course, YieldMax, they come out with funds all the time, right? I can't keep up with them, but they have SDTY, which is an S&P 500 zero DTE covered call strategy ETF, right? Now, this one is very new. Again, we don't have much data on it just because it's so new. But I think one interesting thing about this one is the fact that it pays out on a weekly basis. So I'd like to see how it holds up against XDTE, because XDTE also pays on a monthly basis. So I'm very, very interested to see over the next few months. I'll give it at least till the end of 2025 to see how they keep up with these weekly payments and how the share price holds up as well. So far, the dividends have actually been pretty consistent. There's not much of a variance there, right? 22 cents, 19 cents, 17 cents, 21 cents. So it's not too much of a variance there. So I'd be really, really interested to see how this keeps up. Maybe this is something I could consider in the future, but as of now, they're paying about a 24% yield, which again is very, very comparable to XDTE. So I'll be keeping an eye on SDTY. And yeah, we'll move on to the last two. So the last two I want to look at is IVVW from iShares, right? So IVVW, let's look at the yield on this one. Let's see. So IVVW, about an 8% yield. Kind of feels similar to BALI, except BALI is actually invested into individual companies, but just as far as the yield amount. But this one actually just holds an ETF, right? IVV ETF, and then it writes covered calls on this ETF. So about an 8% yield, just like BALI, just with a slightly different strategy and different holdings. And then the last one I want to look at is GPIX. Now GPIX is probably my favorite on the list. As you can see, annualized return, average annual return is 23%. It is the highest on this list. And what I like about this one is the consistency with the dividend payouts. I don't know if they have it here on their website. Yeah, here it is. So you can see, look at these payments. Look how close these payments are, right? So 31 cents, 32, 33, 34, 35. And it actually looks like it's going up over time, right? We can see their first payment, which was in December of 2023, was 30 cents per share. And we can see that over time, it has actually been increasing. And this is what you want when you want to eventually withdraw these dividends and in order to use these dividends, right? So 8% yield, and I think this is better than JEPI just because of that consistent distribution amount, is you know. So and then of course it's from Goldman Sachs, so you get a very reputable, you know, big institutional money is backed by these funds. So it gives you a bit more peace of mind knowing that the ETF was created by a really, really big institution. So I think GPIX, I think between GPIX and SPYI, just because of that very, very predictable monthly distribution, I think these would be my two options personally. This is not advice, but yeah, here's a list, guys. So you guys let me know, ladies and gentlemen, let me know in the comments, what do you think about this? Also, one more thing too, I noticed I say actually a lot, and you know what, that's something I need to work on. People were messing with me in the comments about it in the last video. Let me know, did I say actually in this video? If I said actually in this video, let me know in the comments. It's something I have to be more mindful of. I'm trying to get better at articulating myself, you know, my verbiage, my vocabulary, whatever you want to call it. But let me know in the comments if I keep repeating myself or saying the same words. Remind me in the comments so I can be more mindful. I appreciate y'all. I appreciate you guys stopping by the channel. You guys let me know in the comments, what do you think about these funds? As always, I appreciate y'all stopping by the channel, and I will catch you in the next video.